If you just glance at Honda's recent headlines, you might think things look pretty alarming. Profits seem to be in a free fall, but that is absolutely not the whole story. If you dig into their latest financial report, you find this fascinating contrast. One part of their business is really struggling, while another part is having a record-breaking year. It's really a tale of two Hondas, and we're about to break it all down.
So, just to get our bearings, the numbers we're digging into cover the 9 months from April to December. This gives us the most recent, most detailed picture of the company's financial health. And right off the bat, here it is, the big, scary headline number. Honda's operating profit plummeted by nearly half compared to the year before, a 48.1% drop. Ouch. So, yeah, what on earth happened? I mean, how does a giant like Honda see its profit drop that steeply? Let's get into it. Okay, to really understand that huge drop, we have to zoom out and look at the big picture. These next numbers really provide the context for the entire story. So you can see the drop right here in black and white. Operating profit got slashed from over 1.1 trillion yen down to 591 billion. But here's the thing, and this is key. Looking only at this top line number is super misleading because it's hiding a major success story. Because hidden inside those tough-looking numbers is one part of Honda that isn't just surviving, it's absolutely thriving. Let's talk about their motorcycle business. Get this, Honda sold over 16.4 million motorcycles in just 9 months. That's almost 1 million more bikes than they sold the year before. We're talking a truly record-breaking performance for the company. So how'd they pull this off? Well, they're basically dominating key global markets. Sales in places like India and Brazil, where, two-wheelers are just essential for daily life and there's a growing middle class, were incredibly strong. Even some new regulations in Vietnam didn't hit them as hard as expected. All of this led to a staggering operating profit of over 546 billion yen. And that translates to an operating profit margin of 18.6%. Now, to put that in perspective for you, for a massive manufacturing business, that is an incredibly efficient and profitable number. To put it simply, Honda's motorcycle division is just a finely tuned, well-oiled machine. But now, we've got to flip to the other side of the coin. If the motorcycle business was the hero of the story, then Honda's automobile division, well, it was facing some pretty serious villains. And this right here, this is the heart of the entire story. The motorcycle division brought in a profit of over 546 billion yen. At the exact same time, the car division posted a loss of over 166 billion. So what's happening is the profits from two wheels are literally covering the losses from four. So why the huge loss in the car division? The report points to two main culprits that are really responsible for the damage. The first major hit was tariffs. These trade-related costs just wiped nearly 280 billion yen right off the bottom line. I mean, that is a huge external pressure for any company to have to absorb. And the second hit was almost as big, a hit of over 267 billion yen from what the company is calling one-time EV costs. And this is all about the difficult and incredibly expensive transition to electric vehicles. Okay, so what does that jargon actually mean? Basically, Honda had to put aside a massive pile of cash to cover losses they expect to have on the EVs they're currently selling in the US. On top of that, they also had to write off the value of R&D for some EV models they've decided to scrap. It's like they're clearing the decks to make way for a new strategy. So with all this drama, you've got record highs in one division, huge losses in another. What does Honda actually think the rest of the year is going to look like? This is the surprising part. They're holding steady. Despite all that chaos in the third quarter, Honda hasn't changed its full-year forecast one bit. They still expect to hit their original targets, which kind of tells you they see those big EV costs as a one-time hit that other factors are going to balance out. And here's how they're planning to balance the books. On the plus side, a weaker Japanese yen actually helps a company like Honda, and that's expected to boost profits. But on the negative side, competition in Asia is getting way tougher, forcing them to spend more money on incentives just to get buyers in the door. And on top of that, there are still risks in getting all the materials they need, like rare earths and memory chips. So this brings us to the most important part. What is Honda's plan? How are they going to navigate this really complex situation and set themselves up for what's coming next? Well, their strategy has four key parts. First, just clear the books. Finalize all those losses from their current North American EVs and move on. Second, double down on what's working. That means making their gas and hybrid cars even more profitable. Third, be smart and adapt. Watch the EV market like a hawk and make quick decisions. And finally, number four, build up resilience. They want to reform the business so it can better handle things like tariffs and new competition.
Ultimately, Honda's confidence really comes from its unique structure. The core message from their report is right here. They can lean on their diverse portfolio, led by that powerhouse motorcycle division and their often overlooked financial services arm, to create a super resilient financial foundation. That strength gives them the cash they need to absorb the hits in the auto division and power through this big transformation. And that really leaves us with the final critical question, doesn't it? The motorcycle business is Honda's engine right now. It's providing the financial muscle for a massive, massive overhaul of its car business. The challenge ahead is immense, for sure, but the foundation is strong. So can the success of two wheels truly pave the way for the future of four? That's the story we'll all be watching.